What's your view of the world right now? I was talking earlier about some analysis we've done at Bloomberg. 15 forecasters tracked by Bloomberg, none of them have been lowering their year-end estimate for European equities as a result of the Greek crisis. Investors, it seems, not all that worried.
That's right. We have a situation where the uncertainties around what happens in Greece and people trying to decide how that's going to impact the underlying economy in Europe. And the big picture is that actually it's a tiny proportion of overall Eurozone GDP, at less than 2%. And effectively the markets are saying, well, the contagion will be minimal, and actually the equity markets are doing OK, and earnings growth should come through. So
we spoke to S&P's Moritz Kramer earlier, and he went into quite a lot of detail about how things are different compared to the last time we all stressed, maybe 2012, about the place of Greece within the Eurozone. He went into detail about the protection that exists to stop that contagion happening. So if you believe that contagion won't happen and that Greece is a small economy, just how strong can European equities be, do you think?
Well, I think there will be a sentiment hit around if there is a major event, i.e. a Brexit, then there is likely to be a further market reaction, although we have seen about an 8% pullback anyway so far. So I think there will be some more negativity around, but ultimately, because it's not likely to undermine the earnings growth coming through from European corporates, I think that we could see a regain as we get into the second half of the year once things settle down a bit.
So when do we start to see that European earnings growth picking up? Because it's been lagging behind the US, isn't it?
Yeah, we've had several years of pretty flat earnings growth in Europe. We are seeing earnings revisions pick up now, and we're seeing Q1 earnings results came through, revenues beat expectations and profitability beat expectations, and we would anticipate that will continue going through into the second half of this year. There is, of course, a confidence issue that's a bit unknown right now with the Greek situation, and you know, this contagion of confidence could be a risk in terms of how do people react? Is confidence impacted? Does it reverberate to other markets? That may be an issue. But as far as we can see right now, we're reasonably comfortable that the economic impact will be limited.
Are you making assumptions about how weak the euro becomes or stays as a result of what we see in Greece? And does that filter through into your expectations for profitability? Because a weaker euro can be quite influential, can't it, on profitability?
Yeah, it's good, obviously, for exporters from Europe. This story's been around a long time, so the markets are well used to this story, and a lot of this is priced in. So I wouldn't expect to see dramatic euro weakness on the back of the Greek situation.
Where are you looking then? Where do you like to invest your money at the moment? We've seen some improvements in the credit expansion across the Eurozone, and the banking sector kind of returning to form a little bit. It's some parts of the banking sector, at least in the Eurozone. You like some of the banks?
Yeah, the banks are quite an area of preference for us right now. The capital issues around banks that has been quite a big feature in the banking sector over recent years is pretty much resolved now. Core Tier 1 ratios are 10% for pretty much all the banks across Europe, and we expect them to continue building capital. And that build of capital enables them to pay substantial dividends going forward. So banks are already yielding 3%. We feel by 2018 that yield, the cash return story, could be something like 6%. So it is very supportive for share prices within the banking sector.
What are you expecting the Fed to do for the remainder of this year? The key question going into the press conference by Janet Yellen today, and indeed looking at the forecast that we get from the FOMC members, seems to be just how many rate hikes we're going to see this year. How far into the future the rate hike's going to be pushed by Greece? Are they the key things on your mind? Yeah,
I mean, the expectations are for a September, 50%, 50-50 call in September. To my mind, if there is a contagion, a confidence contagion, if you like, within the rest of the markets, then the Fed may well push that out to next year. I don't think they'll increase rates if there is too much negative sentiment around in the markets.
So does it make sense then what we saw in markets yesterday and to some extent overnight in Asia as well, where the Greek tensions rumble on, but investors start to think, well, hang on, if everybody's worried about Greece, then the Fed might not hike rates quite so soon, and so away we go higher?
Absolutely. I think, you know, over the last 25 years we've seen US interest rates rise 3 times, and each time the market's fallen around sort of 6 or 7% during that period. Obviously, if you push interest rates going up in the US a bit further out, then there's less negativity around in the market.
Your focus is very much on the European equities sphere. How do you see Europe then compared to other regions. The buy-in to the European recovery story seems to be one that many investors have been playing for a little while. You seem to suggest it's got further to go because of the profitability hasn't yet recovered. But what about other regions of the world? How does Europe compare to, say, the Asian markets or the US right now?
Well, I think there is. I think Europe's very well positioned versus most other markets right now. I think this profitability differential between the US and Europe is so significant, 30–40% margin differentials. And if you put Europe back into normal levels of profitability on trend rates, then the market's on about 11 times 2016 earnings. So it does make the European market quite compelling relative to other markets. Obviously, Japan is doing well as well. Emerging markets strengthening the dollar, and there's pockets of instability or uncertainty around Brazil, obviously, and Russia. So,
yeah.